What's up, everybody? Michael Silva here. What a day in the markets. Tech stocks, they led the sell-off. The distribution days continue to build up in the SPY and the Qs. As you can see, these big red days on the screen highlighted with these vertical red lines are coming on some pretty massive volume there. There's the SPY, there's the Qs. What took place today? Well, the Fed Powell seals expectations for a half-point rate hike in May, reported by the Wall Street Journal. This is right ahead of incoming month May and June, which typically is poor seasonality. So very interesting times. To add to that, sentiment is at some very, very, very bearish type readings. Now, these are just surveys, so we don't necessarily know what investors are doing with their money, but we know what they're saying about the markets here. We have a lot to talk about on today's episode, including crypto, and we're going to be getting into some of the mega cap stocks. Let's go ahead and get into today's episode. Alrighty, everybody, welcome back to the show. We're going to start off looking at the Saylor to Schiff ratio. The Saylor to Schiff ratio triggered a sell signal early in April there. We got out of the position, I got out of my position, and we start to see the market recover, but now we're starting to see it sell off a little bit today. Overall, it's been going sideways, but let's take a look at the daily time frame. We'll take a look here from the ftx.us website. They sponsor me. They support this channel. Their support is greatly appreciated. I go to advanced trading. If you don't know about FTX, you can trade with up to 85% lower fees than the competitors. Let's just go right now into the daily analysis here. So we did get back above that 50-day moving average today. It looked very bullish, but the entire move got reversed, as well as many other tech stocks, as we mentioned. And the correlation between Bitcoin and crypto and tech stocks still holds to be pretty relevant at this time. And crypto typically is a little bit more volatile. So it is going to be interesting how this plays out. As it stands right now, that was a big move to the downside on some big volume, but we're still holding above this area of support as it stands right now. If we take a look at Ethereum, I believe, is still holding. It's just cracked the 50-day moving average, but it's just about right there. So we'll see if that can continue to hold. Like I stated, the sell signal is still there, but really the price of both Bitcoin and Ethereum, they've been going sideways now for pretty much, 2022 for the year. Now, as stated, the tech stocks led the sell-off today. The market started off pretty well. It was actually up around 1.3, 1.4% as we're getting back above that 50-day moving average. That was, what we talked about a little bit yesterday. Can tech stocks hold up? Well, we just came just to around that upper risk range, and you can just see here the market completely reverted on itself, adding to just the increasing amount of distribution days. The 15-minute time frame, you can see we came up here, not quite filled the gap, right? We moved into it a little bit, didn't quite touch the upper risk range, and we defeated the inverse head and shoulder possibility. As you can see, the market just massively went down pretty much straight. You have a small positive divergence on the RSI, and it's a little overextended. So it's very possible to see this thing try to rip back up. Just be mindful that we may very well be in a period of time where you sell the rips, and you just got to be careful, okay? So sell the rip basically means if it starts ripping up, right, you take profits aggressively and you sell into it until things change. Because as it stands right now, we're below that 5-day moving average once again. So we'll see here what takes place. Now, tech stocks, let's get into that. So if you know about market structure, there's 4 stages, 1 through 4. You have accumulation, which is sideways. You have stage 2, which is markup. Stage 3 is distribution. Stage 4 is decline. Now, I want to point this out here is you can clearly see a beautiful trend with the moving averages and the price action. This was a stage 2. Stage 3, which is distribution, this very well may be that stage 3 distribution before we actually see a decline. The reason why I'm saying that is because typically in stage 3 in distribution, you have significant amounts of volatility and chop like this. Now, we never got that really parabolic blow-off type top, so you never know. That can still very well come. David Hunter says, watch and learn. It should come, right? And he's saying that within the next 6 months it's going to happen. Who knows? But as it stands right now, we just have another yearly low here for Google. We're below all these key moving averages. They're starting to curl back around. It doesn't look great at this current point in time. So if it starts cracking down below 2,500, it opens the door for further downside. Microsoft, same situation, right? Nice incline, but now we're starting to see some distribution. This was somewhat of a blow off right here, so that could count. And then you can see here, it's just a lot of volatility within this channel, and you can see that we are just barely hanging on to this previous areas of support there from Microsoft. And really, when you take a look back to the left of the screen, I mean, look at, this was the COVID crash, right? So the COVID pandemic crash right here. I mean, this, we're seeing a lot more volatility, right? This was quick and painless. This is a little bit more treacherous, right? We're seeing a lot more swings back and forth, just a lot more volatility there. So if we continue on, Amazon, it hasn't gone anywhere for quite some time. This could definitely be a period of distribution. We had this nice markup. You can see here, it's been going sideways for quite some time. This is on the weekly time frame, right? So you're looking back all the way to 2020 here, right? Here was the pandemic. And now we're starting to see just massive swings back and forth. You can see the moving averages are holding as areas of resistance. So tech right now does not look good. It does not look like you want to be a part of tech. And if you look at Netflix got slammed, as we already know. This makes literally the COVID pandemic darn near invisible. I pointed this out on yesterday's chart, but I had it circled, but I forgot to point that out. Like, look at this move, right? And this, there was, in my opinion, there was even more fear during the pandemic COVID crash than what we're seeing really here. Now, there has been we could be seeing some capitulation here, and we could see a very well balance at some point, right? I know that Bill Ackman got out of his position for almost a $500 million loss. If we take a look at Facebook, right? Facebook, look at this. It was a nice bounce, but clearly it reverted completely. We talked about that on yesterday's video. Is this going to be a dead cat bounce where we head lower? I mean, Netflix did, and it actually took out the pandemic low. So is the door going to open to actually take out the pandemic low? That would be absolutely crazy. I will say that, ARC Innovations also got hit very hard. Still, it's very similar to Facebook. It hasn't taken out its, pandemic low, but it is getting hit, and it's getting hit aggressively. You can see here, the accumulation phase, markup phase, right? We had this blow off right here, distribution, and clearly we're in a decline to the point where we need to wait to see signs of accumulation. As it stands right now, there's none. So as it stands right now, just get out of its way until further notice, really. And if you take a look at the Qs, I wanted to show the weekly time frame here because we were looking at this area. Now we have one more day in the trading week, but this trend line price is currently below it. We'll see if we can recapture that trend line tomorrow. Now, if we continue on, I want to look at Apple. So these are the saving graces of the market here is Apple, and then we got one more to go over, including Tesla, right? Tesla reported earnings. But Apple clearly is still in an uptrend. The moving averages are moving up. They're not flattening out. So this right here is kind of the market's saving grace. I will say that the PMO, it's been just dying off here. Just, momentum's been dying. So if the market's going to start getting hit, I would expect Apple to start getting hit. And if Apple starts getting hit, we could see some aggressive moves to the downside in various markets. And just to show you this correlation here, I talked about this earlier on my Discord, but if you just look at VT, which is a world fund, okay, Vanguard World ETF, and then you compare it to Apple, you can just see here, like Apple's one of the top holdings, but you got to understand the top 10 right here only makes up for 15% of the total assets. But what I want to call out here is 15% of the total assets, and Apple's the number one. You can see just how close of a correlation that actually Apple has with the VT. And you can see that visually here on the correlation from Apple to VT. It's literally almost at a 1, for a long period of time here, and sometimes it dips and wavers. But the thing is, if Apple starts taking a hit down, we're talking that if the correlation is this strong, you're going to have various other, stocks, equities start to get hit too as well. Okay, so let's continue on to the other one that's holding up relatively well, which is Tesla. Tesla, we're seeing these huge periods of could be distribution. But we are still very well in an uptrend, right? Putting in higher lows up until recently, right? Up until recently, which I'll point out here. But on the weekly time frame, you can see the moving averages trending up. As we know, it gapped up and then really did sell off quite hard today. The reason why I put the bouncy ball on here is because today really does look like just a massive lower high, right? We gapped up, we moved a little bit higher. And we talked about that more in depth looking at the risk ranges. The expected moves and we went just slightly above that in the after hours, pushed a little bit higher, and then it reverted itself completely, wiping out pretty much all the gains, finishing luckily up 3.23%. If it didn't, I think the market would have obviously sold off significantly harder. Nvidia is another big dog to watch, but that cracked to a new 2022 low, and that's getting below this previous area support. So you got to be on defense here because things are starting to really break down. We need to be very careful and mindful with our exposure to the markets. Energy was hit pretty hard today, and that makes sense. We do have the BP chart now at 100. So, when we got at 100 prior times, right here, we saw the market start to, digest or sell off. You can see here, boom. Okay, now we're here. We're starting to see a little bit of a sell-off. So, maybe it's time for energy to take a little bit of a breather. When we take a look how much it was down today, it was down 3%. If I take a look at the chart, it got hit, you can see, but it's still in an uptrend at this current point in time. So we'll see here if we can get some further downside. It's still right on that 20-day moving average, but just be mindful of that because energy is not the only one that got hit today. A lot of cyclical names, a lot of everything got hit today. If we take a look at the top performers, consumer staples, discretionary because of Tesla, and real estate too. So we still have some defensive posturing as everything was hit really across the board. If we take a look here at WTIC high, lower high, lower high, it was up on the day still. So we'll see here if it's going to continue to hold that 50-day moving average or if it's going to break out and take out this high right here at 110. But at this current point in time, this right here was the peak until that can get proved. Until we can get a new peak, I guess. If we take a look at the dollar continues to show strength, which is just not a great sign for the equity markets and various commodities too at times, right? We can see gold, we can see silver move up hand in hand. But as you saw today, we did see somewhat of a sell-off in gold and in silver. Gold, not as much. 10-year yield continues to rip as well. Not too far from that 3% level. We closed today at 29.17. I believe the high, 29.54. So we're pretty close to that level, which has been a clear area of resistance in the past. Now, miners, they got hit. I still think that miners will be a good opportunity. Just be mindful that, we have some reporting earnings. So just be careful here. That was a big down day on some big volume. Perhaps we're going to take a little bit of a breather here, maybe to the 50-day moving average around 58. And then we could consider buying in this current uptrend as it did break out. And it hasn't really taken much of a breath recently. Another couple of stocks that got hit, specialty chemicals, MOS. That took a big hit today, down 9.38%. Look for a retag of the 50-day moving average. And then if we continue on, also, we got AA, which is an aluminum company, Alcoa, and that broke a trend line. Pretty nasty looking day, big type of distribution day, down 16.94%. So be very careful here with that one. Cenex, this was one that I was tracking in my trade ideas. Never got the breakout, but we did, go through expansion, contraction, and you can see we expanded right to the downside. So now just got to wait to see if these things reset up again and they end up being good stocks to trade. But as it stands right now, you got to kind of just watch out. And if we take a look once again here at the SPY, but I want to look at the daily time frame. Clearly, we got outside of that risk range today. So right out of the gate immediately as we started pressing higher, my thought process, as we stated yesterday as we go into the conclusion, is XLF, right? XLF was one we talked about that said, hey, the spike can be rather muted or we can see a severe sell-off if financials, basically start to sell off. But then also if Tesla starts reverting in after its gap up. And that's exactly what we saw. And that right there is that severe sell-off. We got below the low of yesterday's candle and we started moving lower. We're still overall back within this range, below the 50-day moving average, right? Back below the 200. You got to be very careful here, people. Just be very mindful of the risk. Volatility, it's still elevated. Until I see some good trade setups and trade ideas, I'll share them here. But as it stands right now, these are just warning shots being sent out by the market. So take note. See you later.